Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I'll be taking you to two paper money trades today on two high-profile names. We'll look at Nvidia and we'll look at Microsoft today. Let's get right to the first trade of the day, and that is Nvidia. As you know, over the last couple of weeks, Nvidia has sold off. I see 1 month down 4.5%, down 3 months down 19%. If you would look at a way to get long deltas or long exposure to Nvidia without buying the stock, here's a way to do that. I'm going to do the same type of trade in two names for long exposure. If you're not thinking about long exposure to these names, these are not the trades for you. Okay, so first, Nvidia. The trade we looked at going out to the March 28th expiration. That gives you duration on this trade. Buying the 115 call, that's just a little bit. Remember, stocks are moving quite a bit today. So we bought the 115 call and sold this week's March 7th 120 call. Can you maybe make some adjustments to those strikes? Of course you can. We put this in about $5.80, trading about $5.45, $5.50 in that range right there. But what this does, this gives you a slightly out of the money call in some duration, all the way out till March 28th. That gives you 24 days till expiration. And then selling this week's 120 call. So you're looking for a move back towards 120 in Nvidia, moving through the 115 strike back up towards the 120. The risk on this trade, whatever debit you pay is the risk on this trade. And again, you're looking for a move. The max profit is Friday's close up around at or near $120. So that's the call diagonal in Nvidia. Now let's get to our second one, and that is Microsoft. Now, Microsoft, if you look at the last several weeks and months, 6 months down 7.9%, 1 month down 6.5% in a month, and the last week down 3.9%. So Microsoft, off its recent high of $468, now down to $384 is where it's trading right now. So the same idea that if you want to have long exposure to Microsoft without buying the underlying, this is a way to do that. I went out to the March 21st expiration. Now that's a week less, only 17 days till expiration there. Bought the 385 call, which in this case is right about just less than $1 out of the money. So basically an at the money call, and then sold. Looked at the expected move for this week around $11. I rounded that to around $10. So I bought the 385 and sold this week's 395 call. So a shorter term call diagonal. The debit on there was about $8.70. It's trading about $8.66.65. So it's right in that range there. This is, again, the risk on this trade. You're looking for a move by the end of this week up towards the 395 level. The risk on the trade is the debit paid. Now, the interesting thing about the call diagonal, it's in the calendar spread family because you're buying further out dates, selling shorter dates. Therefore, you collect theta on this, but it's a calendar spread, but it's an embedded vertical spread in there. Like in the Nvidia, it's the 115, 120. In the Microsoft, it's the 385, 395. So two call diagonals today, giving you exposure to Microsoft and Nvidia without buying the underlying stock. And the risk on both of these trades is the debit paid. That's our show for today. We'll see you tomorrow with another edition of the Daily Trader. I'm Kevin Hincks.